Hi, my name is Elizabeth Oyejola from ARM Investment Managers, and I'll be taking you through the macroeconomic and financial market events for May 2024. In May 2024, the National Bureau of Statistics reported that the Nigerian economy expanded by 2.98% year-on-year in Q1 2024, indicating slower growth compared to Q4 2023, whereby we have 3.46% year-on-year. The slower paced growth can be attributed to the impact of elevated cost of borrowing and surging prices on output as real household income continues to decline. The Consumer Price Index for April 2024 was released in the period. Headline inflation climbed 0.49% to 33.69% year-on-year compared to 33.20% year-on-year recorded in March 2024. This increase was driven by both food inflation, which was 40.53% year-on-year, and core inflation, which was 26.84% year-on-year. On a month-to-month basis, headline inflation dropped to 2.29% month-on-month compared to 3.02% month-on-month recorded in March 2024. Following the 295th MPC meeting held in May 2024, NPR was increased by 1.5% to settle at 26.25%. Meanwhile, the asymmetric corridor plus 100 minus 300 basis points around the NPR, cash reserve ratio, which was 45%, and liquidity ratio, which was 30%, all remained unchanged. Let's take a look at the Nigerian equities market. The market demonstrated resilience in May 2024, bouncing back from its negative performance in April as the NGX All-Share Index rose by 1.09% month-on-month, pushing the year-to-date return to 32% in May compared to 31.3% recorded in April 2024. We believe bargain hunting in anticipation of the upcoming Q2 2024 earnings and dividend season contributed to the equity market's positive performance. As a result, the market saw fewer losing days, 10 out of 23 trading days compared to 13 out of 18 in April. The best performing sector for the month was the banking sector with a growth of 2.97% month-on-month. It was followed by the oil and gas sector, which grew by 2.06%, the consumer goods sector with a 1.19% increase, and the industrial goods sector, which saw a modest rise of 0.6%. On the other hand, the insurance sector declined by 3.26% month-on-month. Now, let's review the Nigerian fixed income market for May 2024. The market reversed its bearish trend in May 2024, supported by increased liquidity. The average yield in the NTB secondary market dipped by 0.78% in May 2024 to settle at 21.97%. In the secondary bond market, we observed mixed sentiments. The 2-year FGN bond had a yield of 18.86%. 5-year FGN bond had a yield of 19.03%, 7-year FGN bond had a yield of 19.16%, and the 10-year FGN bond had a yield of 18.91%. At the primary market auction held in May by the Debt Management Office, 450 billion worth of FGN papers were offered to investors. However, only 381 billion worth were sold, a significant reduction compared to 627 billion worth sold in April 2024. The marginal rates for the April 2029 and February 2031 were 19.29% and 19.74%, slightly lower than the stop rate of 19.30% and 19.75% from the previous auction. Looking into the equities market, we expect mixed sentiments to influence the local stock market, driven by investors taking positions in resilient sectors, that is, stock of companies that boost positive profits despite inflationary pressures. In the fixed income market, yields are expected to remain at elevated levels following the hike in NPR. A quick recap of what we have discussed so far. In Q1 2024, the Nigerian economy experienced slower growth compared to Q4 2023. Inflationary pressures persisted, with headline inflation rising to 33.69% year-on-year in April 2024. The Nigerian equities market rebounded in May 2024. The Nigerian fixed income market saw increased liquidity and reversed its bearish trend. The primary market auction sales were lower compared to April 2024. In conclusion, in the fixed income market, yields are expected to remain high. For the equities market, we advise investors to invest in value tickers in the banking, oil and gas, industrial, and telecommunication sectors. I hope you found this insightful. Should you have further questions or inquiries, please do not hesitate to contact your relationship managers and our customer care representatives. Remember, we remain invested in your tomorrow.